The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. The Trader's Edge. Now, Steve Rhodes.
Good morning, folks. Welcome to the December 30th, the terrific Tuesday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day, and let's make sure we have an extraordinary one. Now, the easiest way to do that is to always remember that life is happening for us, not to us. Yes, that's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Now, today, you and I, we're going to go check on the circumstance of these markets. We'll go figure out what those bulls and bears, what those buyers and sellers are communicating to you and I at just past 11 o'clock in the morning. I do want you to know I am absolutely grateful for your presence here, but even more important than that, and that's this. During this next 53 minutes, I'm here to serve you. So feel free to send me an email. Send it off to Steve at TFNN.com. Inside that subject heading, please put radio show question. Of course, if you're inside our Tiger's Den, well, then any and every ping will do. So let's go ahead and get this show started on Terrific Tuesday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. A bit of a mixed bag out here. You've got the Dow down 83 points. S&P is basically flat. NASDAQ 100 up 12. Russell's down 6. 5 points to the downside for the transports. Semis are up 33. New York NASDAQ Composite up 9. New York Stock Exchange up 3 there. Gold is up $32. Silver $5.30. And Light Sweet Crude is up 26 pennies. Let's begin by navigating through the daily equity future contract. I believe there is some new profiles for you to be paying attention to. I think it's just the Dow that is attempting to form a new profile. No, it did form it. Formed it last night. So in the case of the Dow, that's going to be panel number 2 from the right, panel number 3 from the left. You'll see that the top of the profile is at 48,894. The center, kind of hard to make it out, but I'll give that number to you. It's 48,702. If we close below 48,702, and also this little trend line here, I would say to increase the odds of a move lower. However, today's going to be, or may become, bar number 3 to the downside. You know, 2 to 4 bar moves to the downside or normal. So maybe New Year's Eve is going to be a move to the downside as well. And then we come back on the markets on Friday. They start to move higher out there. So just be careful, especially in at this stage here, very light volume trading. Now, if we take a look at the ES Mini, you'll see I've thrown in these rising and falling trend lines out there. That price is trading in between both for the ES and the NQ. The ES remains above the top of its profile, that green oscillator and change line. As long as that condition remains, it'll go tackle that descending trend line again. If price closes below that, then you've got profile support at 69.23 and below that 68.79. In the case of the NQ, price trade above the green oscillator and change line, above profile resistance, should go tackle that descending trend line as well. If we're to close below that, then 25.629 becomes the first level of support. We've already covered the Dow. The Russell 2000 is the weakest of the 4. In this case here, it's going to be day number 3 to the downside. That's what it looks like at this stage. We're trading into a swing point, I'll assume, with light volume out here. Nonetheless, we've got a series of lower lows, lower highs out here for the Russell 2000. This one looks more likely to do a day number 4 move to the downside than the others, just simply because of where price is trading on the others above those green oscillator and change line. If you want to take a look at what's really going on intraday, what to be paying attention to, Stevie would say focus on the 2-hour time frame charts, at least for a couple of these future contracts, at least the ES and the NQ. Why is that, Steve-O? Because they both have TD9 count bottom patterns out there. So if you're looking for the downside trigger, what would those be? I would have to say it'd be a close below on the ES Mini, bar number 9 of that TD9 TD9 count took place at 2 o'clock yesterday afternoon, and that low out there is 69.36. Right now, you just have a consolidation with inside its profile. Resistance being that oscillator and change line at about 69.58. Similar pattern going on inside the NQ. TD9 count pattern forming yesterday at 2 o'clock as well. That key number to the downside, 25.648 even Steven. Price is trading with inside its profile, but it has been able to regain the oscillator and change line. So maybe signaling to you and I that the NQ wants to go target 25.793, the top of that 2-hour profile. In the case of the Dow Equity Future contract, it, son of a gun, it would look like it was going to negate it as we were coming into the show. Open. So it did not. So it still has a TD9 count bottom out here. So the level, it's been tested and rejected. The level to watch is 48,665 out there. Now, as far as resistance here, you've got it at 48,701, 48,764. The Russell 2000, it needs a bullish reversal candle to confirm a Rhodes momentum indicator bottom. Again, on the 2-hour chart looks weak. Daily chart looks weak out there. I'm not just referring to the Russell 2000. But I would say to the downside, the levels we're watching are going to be those that we just looked at for the 2-hour time frame chart. We haven't given you one for the Russell 2000 because, well, I'd have to go back to the equity future contract, so the intraday. So why don't we do that? See if I can come up with some numbers to the upside or to the downside. Give me just a moment here. We'll get over to that level. Take me just a few moments here to navigate. Let's get to the day trading. We're going to have the NQ, but we're going to go ahead and put the Russell 2000 in here. As soon as it lets me. There we go. Come on. There we go. Okay, so these charts here will populate here momentarily. We know the 2-hour chart didn't have anything. Well, it needs a bullish reversal candle to confirm a bottom, but maybe we've got some other intraday bottom signals already on the 10, 15, 30, something along those lines. Let's see what we see out here. And the answer is I don't see it yet, but it could. So you've got a TD9 count bottom on a 10-minute time frame chart. You have a TD9 count bottom on a 15-minute time frame chart. You've got a Rhodes momentum indicator bottom on the 60-minute time frame chart. The 240-minute time frame chart price pulled back to its breakout level. That can be a bottom, 25.7220. It's 25.2910 for the 5-hour time frame chart out there as well. No bottom pattern there other than just that. So the Russell is attempting to form a bottom. So if we start trading below the low of the day, those bottoms, those intraday bottoms we just took a look at, they'll get negated. That low of the day is at 25.2460 out there. So watch that to the downside. To the upside, man. I would have to say to the upside, I'd go with the 5-hour oscillator and change line. That's the price that point right now. That's about 25.42. If price can close above that level, then we should rally further out there. So that's what we see when we take a look at the Russell 2000. Let's take a look at the New York Stock Exchange, the advanced client oscillator, and the spot VIX index. New York Stock Exchange, the advanced client oscillator, as you can see, is just above zero. It's a positive 0.6. Basically, that provides buyers with an edge. In the case of the spot VIX index, we are trading below the 50-day at 1682. That provides buyers with an edge as well. We were seeing a series of higher lows out here. We still have that in place unless we start to see the spot VIX index tick below. That number, yesterday's low, was at 1399. Steve Rhodes with TFNN. We come back to this break. We're going to look at Fortinet, EKSO, and AQST. Of course, I'd love to look at your requests as well. We'll be right back.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Welcome back, folks. Let's get to our first request. This is coming in from Duncan Steve inside the Tiger's Den. Wants to take a look at Fortinet out here. Fortinet right now is just simply consolidating with inside its daily, its weekly, and its monthly profiles. Let me first give you those levels. On the daily time frame, we've got support at 79.48, followed by its TD9 count breakout support at 78.63. Your resistance is a sell zone. That's between 82.87 and 83.72. You've got a TD9 count top, took price right back to profile support as well as its breakout level support. That held. Right now, you just got a sideways consolidation. The weekly time frame, let's populate the top portion of this chart out here and see what we've got. There we go. We've got not much. Wow. They really don't have much. We just have price trading with inside its profile. It has a buy zone between 73.99 and 77.85. Up at the top of that profile at 85.58, that's your resistance area. On the monthly time frame, price run into resistance this month at the top of its profile, 84.70. It's a bear structured profile. 78.67 is the center. Support is down at 66.62. So what can we say about Fortinet? Well, we can say here so far is I don't see any kind of a bottom pattern other than a bottom pattern can form when you pull back to its breakout level, which it did on December 18th. It got down to a low of 78.57. The breakout level was 78.63, and that area held. Yeah, that's all I've got here. Seems really just like sideways-ish, deadish type of money. Doesn't sound like the kind of action that you're looking for out there, but that's what's going on with regard to Fortinet. Let's take a look at this second request of yours. EKSO is the ticker symbol. See what it is doing. Well, what I saw, I posted on the screen, it looks like it's having a stellar day out here and a stellar week. And well, the month doesn't really show us a whole lot. So what do we got on the daily time frame? You may have a blow-off top that formed today. Today is bar number 7 out here. That says that the high should come in between today and tomorrow out there. And then price ought to retrace back to its oscillator and change line. Now, that's all the way down at 603. I know that's a tough call. That's a tough stretch to say that's what's going to happen. So let's do this instead. As long as price doesn't close the week under 975, then what price should do is pull back to test the 975 level. That is the weekly TD9 count breakdown resistance area. Now, the weekly time frame does not have any kind of a topping signal. It is an A to B equals CD pattern to the upside, and a bearish reversal candle would confirm a top. But the daily is going to form bar number 9 today, and that says, and this after being, well, that thing was really, it was up for 8 solid days. One little bit lower close yesterday, but you got that TD9 count that's going to be in play by the end of Friday, by the end of tomorrow's trading out there. Monthly chart just really can't make. Well, you've got a monthly chart's pretty nice out here, Steve-O. So this has a TD9 count bottom that forms in June of 2025. And now what we can see here, if you're wondering why did price stop where it did, well, we now know. Price ran right up into the top of its daily profile, and that's at 1130. You'd love to see it close above that, but I think what we're more likely to see is some type of retracement. Maybe it's just a couple-day, 2 to 3 day retracement before it recharges and continues to move higher. So thanks for bringing that one to our attention, Duncan. I'm sure there's others that are going to continue to look at EKSO out there, trade out $11.15. Let's, not in it, just saw it on the trading. Great. Well, tell those people that are in it, might be a blow-off top here on that daily time frame. Let's go take a look at AQST. This is for Dan inside the Tiger's Den. AQST trading out right now at 648. Looks to me like it wants to go target the 665 level. 665 is the daily TD9 count breakdown resistance area. Why would I say it wants to go attack it? It's traded above profile resistance at 603 and its green oscillator and change line at 612. So onward and upward. That's supported by the weekly chart, which is right now trading with inside its bullish structured profile and above its green oscillator and change line. That's the key number, which is 643. We're trading at 647. You'd love to see this stay above that 643 area. That would increase the odds of a further rally. The monthly time frame has price trading above the top of its profile at 544. So that's set up for a further rally. Now, there's an A to B equals CD pattern. I see I've got probably, let's open this up. Get some space out here. Yeah, there's the A to B pattern. Let's pull this in a bit, see where that C to D gets us to. Well, really not much further. So on a monthly time frame, 777. So it's the one-arm bandit. That's where price is headed to. We've only gotten up to a high here. This was back in October of 755. So 22 pennies, is that enough? Is that enough of a difference? Well, we don't have a bearish reversal candle, so we don't have to answer that question as we speak right now. Instead, what the monthly chart is telling us is that it is in a breakout mode. So the daily ought to go target that 665 level out there, Dan. That's what I see. Hope that helps you out. And thanks for your request. Also, Happy New Year to you, New Year to Duncan, Steve, everybody inside the Tiger's Den. And if you're outside the Tiger's Den, I'm wishing you a Happy New Year, happy prosperous New Year as well. Got a cool text message from one of my subscribers. A very cool got to show some guy teeing off, and the ball just keeps coming at you till it explodes, and you get the New Year's Eve fireworks out there. That's the way I like to see it. All right, we're going to go take a look at the gold contract. GPH inside the Tiger's Den would like to do that. So we're going to look at a couple different ways. The first way is the three charts that are going to pop up on your screen. The February contract for the daily, weekly, and the monthly time frame. So here's what we know about Goldilocks. Goldilocks has a TD9 count and Rhodes Momentum Indicator top GPH for its daily time frame. The TD9 count pattern forms on the trading day of December 24th on Christmas Eve, and that remains in place as long as price is not close above 55.10. We also have a Rhodes Momentum Indicator top. So basically that sets the resistance level as really the high from December 26 out there at 45.84. That's the price level that must be closed above for the daily Rhodes Momentum Indicator top to get negated out there and suggest that we're moving higher. So we have just a one-day move to the downside. That one-day move to the downside, in essence, found support at the bottom of its daily profile. That daily profile has a buy zone between 43.4280, 43.6960. As long as price holds that level, then as long as price holds this level, then you're off to basically a consolidation. If price closes below that 43.4280 number, then we're looking at 42.3120. It's TD knockout breakdown level. So you got a daily top. and you now have what looks to be like a weekly top. I really won't know until Friday out there. But if we do have a bearish reversal candle, at this moment in time, it's a dark cloud cover. It'll remain a dark cloud cover as long as price remains below the halfway point of the body of last week's candle. You can do that mathematical calculation on your own, and then you know exactly the number that price, if we're to close below or at, would generate a dark cloud candle, dark cloud cover candle, and generate a Rhodes Momentum Indicator top. What also transpired yesterday, in addition to getting down to the bottom of profile support on the daily time frame, we are now holding its oscillator and change line for the weekly time frame. Now, that's a key number, 43.8960. If you open up the silver chart out here, which we're going to do, and we're going to pull it back just a tad. This is just the February. If I put the continuous contract up on our screen, we'd see even probably something more substantial. But do you ever really want to go ahead and short this instrument unless you know it's a top out there with price trade above that green oscillator and change line? Look, I don't know where it's going to be at week's end. Right now, this level has held. So I can tell you, GPH, that prices that key support is held for the daily and the weekly. The monthly, really not so much. February contract's not going to give us as much information, but we are going to go ahead and form a bar number 9 come Friday out here. So you have a top on the monthly. You definitely have tops on the daily, and it looks like you get a top on the weekly. But they're still neutral, not until we start busting through support. Steve Rhodes with TFNN. We come back from this break. We'll look at the intraday charts for gold.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
This portion of the Trader's Edge is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foresight Fund Services, LLC.
Welcome back up, folks. So as we take a look at the gold contract here, we already looked at the daily, weekly, monthly time frame. Here, what we're looking for are any kind of bottom signals to go with the daily chart getting down to its buy zone over on the left-hand side, the very upper left-hand side. The 5-hour time frame chart forms a Rhodes momentum indicator top, does that at 1400 hours, 2 o'clock on December 26th, and takes price all the way back to its breakout level, 43.50. Getting back to a breakout level can be a bottom. Certainly, it can be a bottom when you get back to the buy zone of a daily profile. So there's two bottoms out there. You've got a third one, which is the 2-hour time frame chart that forms that TD9 count bottom. Does that at 12 noon yesterday. It completes that pattern at 2 p.m. And then we get a nice rally. Looked like we were going to continue the rally out about 8 o'clock as price had closed above the top of that daily profile, but we immediately took a beeline and we're back inside its profile level. The key area here to be watching to the downside GPH now from an intraday standpoint is going to be the 43.16 level. That's the bottom of that TD9 count, TD9 count bottom on the 2-hour time frame chart. Therefore, so we've got the bottom. We got the bottom's very clear out here with regard to the go, no-go zone. The question is, what is it that's holding things back, or what are the patterns out here? And that's a good question. And do I have a great pattern? Let me open up the 10-minute chart. Let's really try to dial in here. Just that stair stepping. So we come up with all kinds of A to B equals CD patterns. So the question is, was there a solid D point top? Didn't really get that bearish reversal candle till about 940. So kind of suspect. Do you have an A to B equals CD pattern to the downside? You do. And then if we do, then we've got a little buy the D point bottom that formed here at 1126. So let's take a look at that. Just a 10-minute chart out here. But, with holiday trading, actually the intraday charts are probably the better ones to be paying attention to. So here's your A to B point. I'm just simply going to move this over then. The next highest high that forms out there. You can see this attains more than a 1-to-1 level. Once it does that, you're looking for a bullish reversal candle. You had a piercing candle that took place at 1040. That was negated at 1110, but now that was reinstalled at 1120 because that was a bullish engulfing candle. Here we can see on a 10-minute basis what? The oscillator and change line is a key level of resistance. That's currently printed at 43.85, called 43.87. If price closes above that, we ought to see 43.89. 60 out there, and if price get above that, you should see a further rally. So that's kind of the overview of charts here for Goldilocks GPH. I hope that gave the information that you were looking for, and it just says a caution out there. Remember, you got those daily, weekly, and monthly tops. You've got these key levels of support that have held, and if those things go, well, then we're probably continue to head south. All righty. Next question. We've got a couple questions coming from Yvonne. She wants to take a look at Tesla and Hood, looking primarily for support and resistance levels. So as we take a look at that Tesla out here, Tesla is testing profile support. It's a bit of a buy zone, Yvonne, that's between 459.53 and 471.45. Close below 459.53, you're likely to head lower. I would say that's probably not going to happen today. We just made a 4-bar move to the downside. We're likely to see at least a 2-bar move to the upside. Resistance 495.28, the top of the profile. The weekly time frame has a Rhodes momentum indicator top at this moment in time because we have an open gap this week. If we close the gap, then we don't have that pattern. But if it remains open, key resistance is going to be 498.83. That is the high from last week. Resistance from the profile standpoint, you're trading above that, 455.14. Old resistance becomes support. You've got the center of the profile on the weekly at 423.91, and then 392.68 is the bottom of that profile on a weekly basis. The monthly time frame shows that we're in an A to B equals CD pattern to the upside. We're close to attaining that 1-to-1 level. That was at 504.98. The actual high this month, 498.83. So price here trading above its oscillator and change line. Trade above profile resistance. No reason for this not to continue to move higher? Well, there is a reason. That reason really becomes the weekly time frame chart, but the daily says I'm going to try to come to the rescue and close that gap. Don't know if it's got the energy to do that between today and Friday out there. Those are the levels that you're looking for, Yvonne, on Tesla. Hope that helps you out. Let's go take an HOOD out here. Let's go look for those same levels of support and resistance. Support is down at a 115.01 on the daily time frame, the bottom of its daily profile. Resistance up at 123.01. It had a TD9 count top. It took price right back to profile support, which is held. If price closes below that level, we're likely to get back to its swing point or trigger that or target that swing point from November 21st, anywhere between 102.10 and 109.99. The weekly time frame has a Rhodes momentum indicator top with price trading with inside its profile. The profile has a buy zone. That's between 124.76 and 130.58. We are trading below the center of that profile. It increased the odds of a move to the bottom of the profile, and Yvonne, that is at 107.30. Below that would be its breakout level, 74.39. Finally, to the monthly time frame chart. The monthly time frame chart shows a sell the D point top that formed last month out there with that bearish engulfing candle. So you got a top on the monthly, you got a top on the weekly, and you got a top on the daily time frame charts out there. So you know that once you take, if you can take out those highs, then you're really off to the races. Here on the monthly time frame chart, you've got price that is found support at the center of its profile. This is a bearish structured profile, Yvonne, and that says that the center is at 116.60, the top at 129.02, and the bottom down at 79.34. If we start trading below and closing below the center of its profile, 116.60, price should target at least the oscillator and change line at 104, and if price closed below that, then we'd be looking at 79.34 out there. Looks like we might get a month number 2 move to the downside out there. If we open up this monthly time frame chart, most of the retracements have been 2-bar moves to the downside. Take a look at them. There was way back here in the early stages back in 2022, a little bit more than that, but typically 2-bar moves to the downside. So this probably does bottom sometime this month out there, but I don't see it right now on the daily time frame. Yeah, maybe. So that's what we've got going on with Hood and Tesla. Yvonne, Happy New Year to you as well, and thanks for taking the time to write in. Duncan Steve says, never mind, Pop. No, let's just take a look at it. We need some. Texas Tom stepped away from audio to talk about MUX from yesterday. Well, I did yesterday, but let's talk about MUX today. McEwen Mining. MUX is a ticker symbol out here. So this is for Texas Tom. Yes, we did get to it. Let's see what it's doing today. So today, price is traded above the top of that daily profile at 1796. That's your support level. Resistance is the oscillator and change line at 1956 or the TD knockout breakdown level at 2066. There's an A to B equals CD pattern to the downside. That formed a bottom, and that formed a bottom with a 3-river morning star candle formation on the 24th of November out there. So the key level resistance is going to be 2066. You clear that, you're going to get back towards its highs. The weekly time frame has got a TD9 count top. We'll finish looking at McEwen Mining when we come back from this break.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
In In the world of trading, only a few names stand out like Larry Pesavento, a pros pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Welcome back, folks. We're taking a look at McEwen Mining. MUX is a ticker symbol. The daily time frame started off with a sell the D point top. That formed back on October the 16th. Then we had an A to B equals CD pattern to the downside. That was confirmed with this Morningstar candle formation pattern. We've got an A to B equals CD pattern to the upside to sell the D point top as well. Price trading below its green oscillator and change line. As long as it remains below that level out there, Tom, price can pull back to test other areas of support. The first one being 1796, the second 1710, the third 1623, and finally the fourth is 1566 out there. That's the daily chart. Weekly chart is a TD9 count top. Consolidation with inside profile. Price found support at the buy zone, which was between 1423 and 1542. Price is below the oscillator and change line. As long as it remains below that, we could see a further move lower. That's really supporting what we see on the daily time frame. The monthly chart says the daily and the weekly are in a world of their own, or is it just the monthly that's in a world of its own? The monthly's got no topping pattern. It has been trading higher for 6, 7, 8, 9. This could be the 10th consecutive month to the upside out there. You know, you're starting to play with fire, although there is no topping pattern. There's an A to B equals CD. It needs a bearish reversal candle. We don't have that. That's certainly not going to occur this month out here. So the monthly is suggesting it wants higher price out there. And the daily's just got to sort through being able to clear these resistance levels. Those two key areas being 2066 and 2133. So, Tom, I hope you got it today. And thanks so much for your request out there. Dunk wants to take a QBTS out here. So let's pull that up on our screen, see what that is doing. QBTS trading out at 2706. It is consolidating with inside its daily profile. And that's between the range of 2445 as support and 2798 as resistance out there. The weekly time frame. Weekly time frame, you can see the Rhodes momentum indicator top led to price pulling back to profile support. Just a consolidation within it. In it being at 2137 as support, 4111 as resistance. The monthly time frame. Monthly time frame. Yep, I don't see an A to B equals CD pattern or anything along those lines out there. All that I see out here on the monthly base for QBTS is a consolidation with inside its profiles. I take that back. It is trading above the top of its monthly profile, 2626. So that's a positive. That's in breakout mode, as long as price remains above that level. But it's got to contend with, obviously, the weekly Rhodes Momentum Indicator top. I'm going to imagine there's a daily top. If we pull this back, it says Rhodes Momentum Indicator top for its daily time frame. So resistance, 27.98 again on the daily. Profile resistance. Breakdown resistance, the TD9 count, that's up at the 32.53 level out there. That's what I see with regard to QBTS. Dunk, hope that helps you out. And a little bit of discussion about platinum in the news these days. So why don't we pull up the April platinum contract? That's the active. That's the forward contract for platinum. On a daily time frame out here, what we see is yesterday was just, big old bearish engulfing candle. Was that a sell the D point top out there? And I'd say the answer to that question is absolutely. So you got a negated TD9 count top and negated that 2 days ago, but yesterday generated the sell the D point top. So the sell the D point top, price trading 47. So you've got to trade with inside its profile, resist up at 24.47.40. Support is a buy zone between 20.36.10 and 21.73.20. That's the daily message. The weekly message is you may get a sell the D point top. As long as we won't know, it just requires a close halfway into last week's bar out there. Visually looking, looks like around the 22.95-ish area out there, 2300 area. You got to do the calculations on your own. That sell the D point top, if it does form, if we do get a bearish reversal candle, ought to take price back to support, which is its oscillator and change line, 1959 out there. So you got 1959, 2036 on the daily time frame as a level of support. The monthly is going to go ahead and complete this Friday a monthly TD9 count top. Now, I don't have the oscillator and change line. I'd have to switch over to the continuous contract to come up with a value for that. I'm not going to do that at this moment in time. So platinum's got a top on the daily, top on the weekly out there, and the monthly is going to form a top come this Friday out there. So again, this is all just suggesting to be careful in the metals, but we haven't broken any levels of support. Might as well put the silver charts up here as well. So let's go look at the March contract for it, daily, weekly, and monthly. Just remind ourselves as to where we are there. We can also go ahead and throw the GDX up. Oh, I know what we're going to do. Said the GDX, I promised to do something yesterday. Mr. Bill's going to hold me to it, although he hasn't yet. But if we take a look at silver out there, silver's got that sell the D point top yesterday, price holding support, which was its oscillator and change line. The weekly time frame has a TD9 count top. It would be negated with a close above last week's high at 79.70. Otherwise, price ought to pull back to 63.55 out there. And the monthly time frame chart is completing a TD9 count top on Friday as well. So the metal's really showing similar looking patterns amongst their charts. If we get more news about potential peace out there, I don't see it. That guy Zelensky says he doesn't trust Putin. I say, who trusts Zelensky? Either. Come on. All right, so that's what's going on with regard to silver. But let's take a look at what I did promise yesterday. There was a question, or maybe I might have just simply brought it up, which was the was a fact here. I would put the G. This is what brought it up. If we take a look at the charts for the GDX, my recollection was we weren't seeing the same type of topping signals that we do in gold and silver, and for that much platinum. Now, the GDX does have a sell the D point top for its daily time frame. It does not have a top on the weekly time frame. It is going to complete a TD9 count top on Friday for the monthly. So you got to kind of have these mixed signals here. My point was, even if we don't have all these tops daily and weekly out there, what is going to happen? And yeah, Stevie, what's going to happen? Slideshow, current slide. What? Oh, that's not it. No, that's not it. Here we go. So I wanted to be able to show you the correlation between gold and the GDX. So when I'm saying gold, I'm referring to the gold contract, not the gold, Barrick Gold. The bottom panel, this is a 5-day correlation. When bars are above zero, it says we have a direct correlation. That means gold goes higher, the GDX goes higher, and vice versa. This is super strong. That's a 5-day that you're looking at right here. Here's the 3-day. The 3-day average, even nearly just as strong as well out there. So again, who's the head? Who's the tail? Gold contract is the head. Okay, the GDX is absolutely the tail out there. So that's that pattern for a 2-day, a 3-day, and a 5-day. Here's Agnico Eagle. That is, as of yesterday, it was the number one weighting inside the GDX. I believe it was 9.11% out there. Look at that correlation. That's number one instrument inside the GDX. You don't think that if gold goes lower, that Agnico Eagle is going to head lower, and that's going to pull the GDX to the downside? Of course that's going to happen. This is showing you the correlation between gold, which is Barrick Gold, which was discussed, which was asked for yesterday. This is a 3-day correlation out here, and you can see, like, it's not as strong as the others, but Barrick Gold is not the top-weighted stock out there. The top-weighted stock is Agnico Eagle. Steve Rhodes with TFNN. We'll be right back.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
In the world of trading, only a few names stand out, like Larry Pesavento, a pros pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
Welcome back, folks. We'll end the new year here with you, and I do wish everybody a happy and healthy new year. Let's make 2026 a great and fabulous year. That's a great introduction to this chart here that we're looking at from Mr. Z. So thanks for that question out there. And the question is, what's the second year, basically, of a presidential election? In this case here, all I have to do is just flip on the midterm elections, and that's what we've got out here. So that's at least what I'm looking at this moment in time. Really, what's going on in the midterm year, right? So in the midterm year, what typically happens in the S&P, this is over the course of the last 97 years, that means we have 24 different touch points. What we typically see is your typical move higher into the beginning of January before price starts moving lower into the end of January or early February. And then we get a bit of a rally. In this case here, on average, that rally lasts, John, through about April the 18th. And then we move lower on a consistent basis into, when I say the Santa Claus rally really should begin, in this case here it would be about September 30th. And that's the rally that should then take us into the end of the year. So that's a seasonal pattern. If we take a look at what transpires during midterm elections, I think that gives you that flavor as to what to expect and anticipate. If you look down here in the very bottom right-hand side, you'll see it's pretty flattish, right? Pretty flattish. Then we got the sell in May and the typical summer swoon to the downside that takes place out there. Shows us that from a trading standpoint, on average, that Mondays, this is pretty consistent out here, are your worst trading days, and the best trading days worst trading days to the downside, best trading days to the upside tend to be on Wednesdays. That's the pattern for the S&P 500. What's that same pattern for Goldilocks? It doesn't really even matter. Well, here I've got the midterm elections selected as well. And on this, wow, gold does pretty gosh darn good, doesn't it? That's rallies basically into about the middle of May before it pulls back into the early part of June, July, and then heads higher. Folks, thanks so much for being here. Have a terrific Tuesday. Have a wonderful Wednesday. Have a happy New Year. And I'll see you back here 11 a.m. sharp next Monday. Take care, folks.